And welcome. This is Mary Ellen McGonagle here with Erin Swenlin each and every Thursday, where we bring you our wisdom with an eye toward helping to educate and empower our viewers. Erin, how are you today?
I am doing quite well. Thank you very much. It's going to be another hot one, though.
Yes, triple digits out here, so just trying to, stay under the shade of a tree when I go outside.
Absolutely,
It's
with
pretty
your
warm.
mask on, I'm sure.
Yeah, so still actually staying pretty contained myself, not getting out too much, but I did get to that restaurant last weekend. I mentioned they're starting to open up. It doesn't seem to be universal. It's very one-off as far as those restaurants that are opening, but yeah, you had to wear your mask while being seated, and then once at your table you were free to, of course you have to eat, so you're going to be able to take that mask off. But interestingly, I have to say, it wasn't all that. I found it to be not they had us waiting, and a lot of things took a long time to happen, and I thought, I kind of wish I was at home.
Well, I have to say, my big thing last week was I actually got to get my hair done. Woohoo! And
Wow,
we
lucky
did the
you.
same thing. They had sneeze guards on, and I had my
Hmm.
mask, and we were all, each station was more than 6 feet apart, but we put our mask on to go to get our hair washed and stuff. But, it's a different situation. But boy, I have to say, getting rid of those roots was magnificent.
This is when we're glad it's not video, right?
Yeah, absolutely.
Oh my goodness. Well, good stuff. We certainly have a lot that we are going to be sharing with you today. It's an interesting day and a period in the market. So super excited about our agenda today and what we're going to be covering. We are going to start as usual with our wisdom of the week, and it's going to tie in with the broader theme, and that is the art of mastering the perfect pullback. And in this case, fast moving. We'll be covering other stocks as well, but the concept is how to tell whether your stock is just pulling back, or is it something more. So I think we're very timely here with that subject. Also, how you can uncover top picks, and by that I mean stocks that can be bought on the pullback. It's certainly a little early in the game here to tell whether it's more than that, but we are going to go and share with you some examples. And then again, you want to make sure the stock is simply pulling back, not poised to go lower. And by that, one of the ways you can do that is to pay attention to your stock's surroundings. How are its peers behaving, and use that as a gauge. So a lot to cover today. We look forward to that. So go ahead and share our wisdom of the week. Erin, letting you share your wisdom first.
Sure. Mine is the second bullet. And for me, we are talking on a day where the market's down over 5%. So it's obviously a really rough time. But it actually, consider those pullbacks, days like today, as opportunities. They're not necessarily going to be a sign of weakness, which is why we're going to be looking at individual stocks and personalities. And, I look at those generally as an opportunity. Granted, it's no fun when you own the stock, but if you don't own the stock, this is a great time to start looking and putting watch lists together so that you can take advantage of that move back to the upside, because, gravity will pull it down, but eventually it's going to go back up. That's just how it works.
Mm-hmm. Yeah, certainly a lot of investors hoping that takes place sooner than later.
Yes.
My wisdom of the week, quite simply, is that trees do not grow to the sky. And I've been doing this as far as analyzing and advising on the markets for a lot of years through many market cycles, and historically winning stocks, and really most stocks, but I tend to traffic in those faster growing outperformers, and they do need a reset period before resuming their uptrend. So in other words, they're not just going to endlessly advance upward and onward. And that period of a pullback, while it can be painful, as Erin mentioned, it really is a healthy thing. It allows these stocks to, as I say, reset and really allows them to advance beyond that pullback period.
Absolutely. I mean, let's face it, the bear market was awful, awful,
Mm,
awful.
mm-mm.
But once we came off of that bear market low, the opportunities were just astounding.
You bet. You bet. Yeah, it's very true. So let's go ahead, and what I did want to do is talk about the art of mastering the perfect pullback, and in this case, fast moving stocks. So for me, I do like to and need to pay attention to my surroundings. What is occurring in the broader markets? How are we faring? So let's go ahead and take a look. It's not particularly pretty, but we can see the Dow now is down 6%, but you want to pay attention to where the broader markets are. Where are they heading? And this is really going to provide you with some intel. Is your stock dropping more than the broader markets? Why? And take a look at, for me, it's going to be all about sector, the where are the areas of potential strength. And in fact, it is in line with general markets. We're seeing consumer staples and utilities, while they are down, they're not down as much as the broader market. So it's a move into some of these more defensive areas. But we can see down here at the bottom some of those recent movers, financials and real estate, are down certainly as much as the markets. So what I'm going to do now is go to what's called this sector summary. And from here, we can do the candle glance view, because I'm all about using simple moving averages to define whether the markets or an industry, and then from there we'll get down to stocks, but are they finding support? So this is that candle glance daily view 2-month price chart, and it automatically has the 20-day simple moving average, that's this blue line, and then the 50-day is the red. So just really quite quickly, we want to see which areas are potentially finding support and which are not. So I'm going to go ahead and take it out a little bit further and take a quick look here at XLV. This is the healthcare sector. Interestingly, healthcare normally is viewed as defensive, but it has been underperforming for quite some time. And what I find concerning is the fact that healthcare has broken below this 50-day simple moving average. For me, that is the line in the sand. We can see really big volume on today's break, and then the RSI has broken negatively. So from my work, that is telling me that healthcare stocks are not finding support, and there could be more potential downside ahead. So that is just a quick view as far as the bigger picture. And from there, I'm going to take us back, and we can take a quick look at technology, because that has been the leadership area. You are going to want to pay attention to leadership and the performance within those leadership groups, because if we see a faltering and leadership areas begin to deteriorate, that is going to spell trouble for the broader markets. And at this point in time, we are seeing a somewhat orderly pullback given the significant advance in leadership technology stocks. I have this 10-day simple moving average. The next area of support is going to be this 21-day simple moving average. And so what you want to do, and this is going to be relevant for stocks as well as sectors, go back historically and take a look. We can see historically health technology had this pullback in that mid-May period. And at first glance, it was a little bit alarming, but it did find support at the 21-day simple moving average. So that's going to be our next area of potential support. And Erin, I know you have some wonderful charts that can take us through a look at the broader markets. And
Absolutely.
yeah.
You know, it's really important, you know, before you start buying stocks or anything like that. And it's very important to know what's going on in the broader market, as you were saying, and knowing what those sectors are doing so you can find those areas of strength. I did want to give everybody my look at what's going on today. Like I said, we're looking at a pretty big drop here. I'm going to make sure that this is all the way up to date. There we go. All right, so this is a 10-minute chart, okay, a 10-minute bar chart. And it has our PMO, our momentum indicator down here, and this is our volume, tells you what's going on with volume. And one of the things that I've noticed just today, we were looking at this area of a consolidation, just sort of moving around. We had that big gap up. And when you start seeing something like this, especially when you can see it topping up here and then slowly declining, that could very well be what we call an island reversal. It's like an island, gapped up and it's sort of floating out there on its own. And the expectation when these kind of things happen is a gap back down and a move back down. And this is pretty ugly. But I'm also noticing that we do have support sitting here at 3,000. And I believe if I were to look at our other chart real quick before we break, let's look at this candle chart right here. Actually, this is of the SPY, but it follows a lot of what I'm following. And you can see we did have that big drop, but we have the 200-day. This is an exponential moving average that is ready for support. There's support right here at these tops. There's a possible ground, let's put it that way, beneath us. And here was the other thing I noticed. This is the volatility index, and it measures fear, basically, is how we look at it. And when you get the higher numbers, and I have this inverted, that's more fear in the market. Typically, when you get these less fearful points, and you get right up to the top, that usually is going to precede a decline, typically. When you get it down here, which is what we want to see, and you can see all these green arrows, when that happens, that usually lines up with a nice little pop. Now, it may not be a long term, it could be something like this, and then it comes back down, but at least you know that over the next day or two, we should expect a bounce back up. I'm not looking for this waterfall effect going on here because we have some really nice support lining up with the 50, the 200, with these tops. So I think that might be a place where we'll at least get a pause and an opportunity maybe to close out some positions or keep an eye out for the market to make that turn and then take advantage of those pullbacks and get in.
Very good. Yeah, interesting. And you were talking about support there
Yep.
and that next area to really keep an eye out for. I also shared those simple moving averages as another guide. You want to have these layers and the ability to interpret what is happening so that you don't panic in this case and really have a good feel for where we may or may not be headed. We are going to take a very quick break right now. When we get back, I'm going to share with you some examples of a pullback versus something more so that you'll know what to be on the prowl for. And then from there, share with you some screens that you can utilize that can help you uncover potential candidates should we see these markets find support. So we will do that when we get back. And we are back. Let's go ahead and take a look at an example of a stock where the pullback was more, where the price action pointed to further downside. And this is a company called Insulet Corp, PODD. They provide diabetic medical systems to individuals, and it really had been a big winner off the bottom here. The stock, the company found a lot of growth taking place, and it also was defensive in nature as people still continued to need these medical devices despite a potential slowdown in the economy. So we can see it powered to new highs back here in mid-May. And I'm familiar with this. This had been a big winner for us with my MEM Edge report. And so what occurred here is a price break below this 10-day simple moving average. The news is the company came out with a secondary offering, so it really diluted the original shareholders' their price. So the stock did drop, and it was with anticipation that at some point the stock could recover from that secondary offering. So let's start with that. The price breaks below this 10-day simple moving average. Now, for me, that's going to be a yellow light, a yellow flag, caution. So as the stock continues, however, it is finding resistance at that 10-day. It's unable to break back up. And as the stock price continues to advance, that 10-day now rolls over. That is not a good sign because now your area of resistance is occurring at a lower and lower level. And then take a look at some of these other indicators. The RSI turned negative. So we did remove PODD from our list as it was not participating with the broader markets. That's another thing you want to consider. Where are the markets going? And this stock clearly was not going in trend, and the RSI turned negative. And then we did have this negative MACD, the moving average black line down through the red, very simply just telling us that the momentum has shifted. But once it gets down below this net neutral zero, that is when it gets more concerning, when you can marry that with a negative RSI. Then if you still own the stock and it breaks below this 50-day simple moving average, for sure, that's when I am going to exit the stock. So that's a telltale way of whether it is more than just a pullback. And we are going to look at other stocks that have pulled back. Erin, I don't know if you
Mhm.
wanted to.
Sure. I have one and it did pull back, and it's a similar situation where
Mm-hmm,
I I actually did own this. I got stopped out of it today. Once we started making this really nice move to the upside, and this was almost up every single day. Once I saw that, in preparation for a possible pullback, I went ahead and set what we call a trailing stop. A pretty tight one. I think it was a 2%. So if it went down 2%, it would automatically sell. And obviously it hadn't triggered. And today, with that big gap down, it's down over 5.25%. It dropped below not only the rising trend, it has broken below that 20-day EMA, which is what I use.
mm-hmm.
So in this case, and look at the momentum has turned, and look at that RSI. Just really fell to the floor here and is just about ready to hit that negative area.
And
So
we're getting pretty big volume there too.
absolutely. And you can
And
even see with that OBV, you have these, look in the thumbnail, you can have declining tops, but you have rising tops. There were a lot of things that told me that this won't last forever. As you said,
mhm.
trees don't grow to the sky.
Right, exactly,
So
yes,
this was one I was really getting a nice move to the upside, and I wanted to preserve that profit. And so
sure.
setting that trailing stop, I did get to lock in a lot of profit that I had made. I lost some, obviously. The big gap downs don't help you when that
Mhm,
comes together,
mhm.
but it certainly isn't as bad as it is right now. So that's a great example, I'd say, of one
Yeah,
that is
so I
pulling back and it's not behaving.
yeah,
That's
and
real time.
I'm gonna share another stock if I may, because I talked about the need or take a look at how its peers are behaving. This is Lowe's, LOW, which is a direct competitor with Home Depot, and we can see a different dynamic here where it is finding support at this upward trending 21-day simple moving average. It's really coming off a super overbought position, and the RSI is still up there above 50. You're going to want to keep an eye on it, but unlike Home Depot, and I will tell you this is on one of my consumer discretionary stocks from
Mhm.
my MEM Edge report, so I'm really going to keep an eye on this. If this RSI breaks, it's going to be very closely monitored. So that therein lies the difference. So good example. I did want to go ahead and from here take a look at some of the screens that you can potentially run that can point you towards stocks that are finding support versus those that are not. This is a service called FinBiz. I use it simply for its ease in running screens such as what I'm going to be sharing with you today. And in particular, I am looking at stocks that could potentially be poised to trade lower. And here's what I did. I asked for all stocks over the past 4 weeks that are up 10% or more in price, yet today they are breaking below their 50-day simple moving average. Very much for example or educational purposes, I went and ranked this by market cap. So let's go ahead and take a look at some of these stocks that, unlike Home Depot, which is still holding up, these are going to be a little further down as far as deteriorating.
Mhm.
Wells Fargo, now it was a latent mover as far as within these financial and bank stocks, but today's action has it just at that 50-day simple moving average. Let's take a look. Oh my goodness, Groupon was one that I did want to go ahead and take a quick look at from that screen. So GRPN is the ticker,
You just
and
lost your screen. I just put mine up.
oh, perfect. Okay, so let's go ahead and, if you don't mind, take a quick look at that Groupon stock because it is one that has had a significant advance, but is clearly breaking down. You can see, oh, I didn't realize it was down quite that much, but that
Exactly.
break below that 50-day is very ominous and is telling, foretelling of more potential downside from there. And some of the other stocks that are there.
And I would just say too,
Oh,
here's an important area right here you would have wanted it to hold. And yesterday it didn't hold that area of what I would look at as support. So that was already giving you a sign that there might be some more problems under the hood, as we
mm-hmm.
say.
Very good. Little intel ahead of time. MSI is another one, and that is a stock that also was starting to deteriorate, Motorola. And there is a commonality here. These stocks that are breaking down the most are those that really didn't get up above their 200-day moving averages. Most of these stocks were still trying to recover from down and out periods and were down prior to today. JWN is another example. That's Nordstrom. So we can see a theme there, certainly, with those stocks that are finding more in the way of distribution today.
Mhm.
So that is one screen as an example that you can take a look at. Now, let's go ahead. What I also wanted to do is share with you stocks that were big winners that are seemingly so far finding support. So I'm going to go ahead and share.
Microsoft is mine. Just before we leave my screen,
Oh, no,
I'd say,
absolutely. This is great. Go right ahead.
yeah, I think Microsoft is one that is pulling back. It's actually, I think, going to be a great opportunity here if it can hold this area of support. It hasn't broken down below that 20. This is the 200-day simple moving average. This other green line, I didn't
Mm-hmm.
put it in as blue. But what we'll watch is this area of very short-term support. We've already broken down below this area of support today, and
Mm-hmm.
that's a bad sign. But I think at this point, this could be that opportunity, that pullback opportunity that I talk about. Right here, you can see that momentum had shifted, and it had, during this period, it was able to unwind, as I like to call it, and it moved
Yeah.
out of that highly overbought territory. So there's room for it to move back up. I would be just watching Microsoft. I think this one could end up being one of those ones where this
Mm-hmm.
pullback of 4.5%, 4.25%, could set us up as a good re-entry.
Yeah. And I will say Microsoft was up over 3% yesterday, and that's a big move for a mega cap stock.
Hmm.
So a pullback is not entirely out of line. Now, if we go back historically to that February period, we can use that as, of course, we were heading into the bear market, but what to be on the prowl for as far as potential further downside. So in that mid-February period when it began to break below those simple moving averages, your RSI turned negative. So that is going to be your guide as to what to be on the prowl for more in the way of potential downside as opposed to a standard pullback.
Sure. And, it's really important to watch these. If you own these stocks, it's very hard to swallow a 4% plus move, but you're going to have these pullbacks. And I think today, having these very strong pullbacks like we're seeing, I look at that as a possible what we call selling exhaustion. Everybody is just throwing the towel in. It's just, let's get, out of here. And that's kind of that exhaustive move that we could be looking at. Now, I'm not saying we're not going to go down, but there are a lot of things lining up that might be setting these kinds of stocks up for a really great move to the upside.
Yeah, so that again, we are going to be paying very close attention to whether the stock is finding support or not. So that takes me to another screen that can help you with that as far as uncovering potential candidates. So what we are looking at here, let me get to this.
Go
Okay,
ahead.
did I unshare again?
Yeah.
I'm really doing just great today. Okay, well, what I'll do is go ahead and outline for you the characteristics of the stocks for the screening purposes. And in this case, I did ask that those stocks be up 10% or more over the last 4 weeks. And in this case, the stocks are finding support. They are finding support at the 20, 50, and 200-day simple moving averages. And then from there, we can take a look at some of the examples. So if you don't mind pulling up
Yeah.
CVNA as an example, and you'll see that this is a stock that
Let me
had
get a better
been
chart style here.
Carvana is a company that sells cars primarily digitally, and they really had great success. And you can see that it had experienced a nice uptrend. I don't see those simple moving averages in there, but it is finding support. So it
Yeah.
is giving the appearance of uh, find, potentially just being a pullback. We can also take a look at WGO as another example from that screen. And it is experiencing a significant drop, but compared to where it's been, you can see it got up into overbought on that RSI. You're always going to be on the prowl for a pullback. Use history as your guide. The end of May, the stock had a significant pullback as it did in the beginning of May. So the stock has a history of these types of pullbacks. Make sure it continues to find support. That's what you are going to want to do, and pay attention to those surroundings. We talked about that. Where is the stock dropping more than its peers? Certainly the growth prospects for Winnebago haven't gone away, so it could be a candidate as a stock that is simply pulling back. WYETI is, that'll be our last example here from that screen, where the stock had been up a lot, but it is pulling back to a potential area of support. So I think
Absolutely.
we're a bit out of time. I do want to thank you for watching. Check in with us next week with Wealthwise Women.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.